All right. Happy New Year, guys. We are here talking about interest rates. A lot of fun, exciting things last year with them. Not. And we're just going to talk about how it affects people's buying power and actually selling decisions.
Selling decisions, it affects sellers?
100%.
Can't be.
Uh, probably the mainstream media idea of what's going on is interest rates right now, as of today, they're hovering around 7. Now, when someone says, "Well, I got quoted, 7.875 or 6.5," there's so many variables here that it's again, it's this is a just general broad speaking here. They're hovering around 7. You
But
know,
just to touch on it quick, if we're talking on this subject, those variables could be the type of loan you have, your credit, down payment, anything like that. So when we say there's a lot of variables, some are in your control and some are outside of your control as a buyer as well.
yeah. So they're hovering around 7. Last year they were maxed out, in the low eights.
Mm-hmm.
And then we started to see some refis happen, when they dipped around 6.5. I think gone is the marry the house and date the rate. I can't stand that when
Yeah.
real estate agents start doing that just to get that next sale. I think it's a really big conversation that buyers and sellers have to have is what does this actually really mean? If we're paying $2,500 a month in rent, going up to maybe a $3,500 mortgage payment.
Because the statement that you made, the sentiment behind it is, oh, well, when rates drop, you can refinance. And the point being, there is no guarantee that rates are going to drop. They might go down a little bit, but we've had the conversation before. They're never going back to where they were in 2020, 2021, 2022. And maybe they do, but it's probably not going to be for a significant amount of time. You might pay off your 30-year loan before that point.
Yeah.
Yeah, I feel like we've talked to a lot of different lenders, and like last year we kind of hoped that the election would kind of pull them down a little bit, and then maybe it did a little bit, but it wasn't, it wasn't what we saw 4 years ago, and there's just so many benefits to owning as opposed to renting. I know that I talked about that a little bit on, the last one of like how you can gain wealth over time with owning a home versus renting. And it's like I'll just kind of say the main ways that you do it. But first, it's appreciation. Homes tend to appreciate what 2 to 3% per year on average over time, right? So you get appreciation. Two, you're paying down a mortgage, right? So you're gaining equity. So you're gaining equity on the appreciation side and the paying down the mortgage side, right? And then there's one that you kind of don't think about, but it's the money that you're saving over time with when your mortgage rate or your mortgage payment typically doesn't change all that much. It might fluctuate a little bit with taxes and everything, but typically it's going to stay around the same. Where on average rent has been increasing like 4% to 6% per year, and that's not going to change. That's going to keep increasing. So it's like your rent payment's going to keep increasing, where you're kind of like saving that money, if that makes sense, over 30 years. Um, I don't know. It seems like you should have made that decision in the past,
Yeah. Yeah.
to purchase. But
Yeah, and when we're talking about affecting sellers' decisions, is when they're sitting there. There's I'll call them like 3 grades of homes: your entry level home, your mid market, that step up home, and then like high end. I don't even want to say luxury, just the expensive ones. Lake homes or acreage properties. Something in our market that's 600 and above.
Yep.
600,000 and above. Um, where it affects the selling decision is if that middle market, call it $450,000, unless they're super financially stable, like, and they've got that, they're used to that. Some of them I've heard as low as 2 and an eighth on their interest rate in that mortgage payment. It's sticker shock when they want to go buy a $750,000 home when it's maybe tripling their mortgage payment.
Right.
So those people aren't moving, which then the step up buyers from your entry 3 bed 2 bath splits in town, 350 and under, they're not moving because now middle market stuff isn't moving. So it just kind of creates this like cycle where well qualified and highly motivated people are in the market right now. Gone are the people that want to, hey, I don't really like the color of the paint in my house. So they're going to go buy one of their neighbors' houses across the street. Now, that was like when things were gangbusters. That was a reason I heard is like, well, we don't want to change the carpet and paint. We'd rather, we've got some equity. We built some up over the last couple of years and their interest rates are better. We're actually going to have a smaller payment and we're going to go move. So, I mean, that's just not happening. That scenario is not happening right
Right.
now. So it's definitely kind of creating a stall in the market with this interest rate. Now, experience with lenders, what are they saying, when you have conversations with them?
I'm hearing that we should expect rates to kind of just stick around where they're at. If they do go down, maybe we're kind of established. I don't remember if we said it while we were on the video or if that was beforehand, but we're right around 7%. Oh yeah, you said at the beginning. So we're right around 7.5 or 7%. So maybe we can see it going down to 6.5%. That's about the lowest I think I've heard over the course of the year. And what I have heard from lenders, they don't expect it to hit 8. So we're going to probably stick. Well, we'll call 7 kind of about where it's going to be, give or take a little bit.
Yeah.
I've heard pretty much the same thing. It's just not going to, fluctuate significantly. No, that's also people, kind of making guesses.
Right.
We've also made guesses before in the past and have been very wrong. You know, so yeah, it's hard to say for sure, but that's what most lenders are saying.
Yeah. Some other ancillary reasons why people aren't moving as well. That's a big word of the day. I'm going to look it up and see if I used it correctly.
Nice.
Is when I talked to some lenders, it's consumer debt as well. It's not really even the home interest rate. It's all of their debt as well. Their DTI, debt to income, is their credit card payments, their truck payments, their suburban payments. The average, I think it's like $742. That's the average car payment in America right now.
Wow.
A lot of families have 2 cars. So like that's a huge amount right there. And then you see campers. Now I'm all for people having fun and having the cool fun stuff and living life, but it's also like at what expense? If you're mortgaging or in debt up to your eyeballs where you can't afford a home, well, then you don't have any stuff to really enjoy at that point. So
Yeah.
we're hearing a lot of consumer debt is what's driving the unaffordability of action or prioritizing home ownership over the things that are going to be constantly losing value.
Yeah. And interesting on that topic is Tommy and I are in a Bible study, and one of the guys there works for Polaris. And it's just interesting kind of listening to what he sees in their industry for the power sports industry, and he's saying it's slowing down. We've seen as we are here in Minnesota, we've seen the articles about Arctic Cat is going to be shutting down production on their snowmobiles. It's just, I believe that speaks more to the industry and then just exactly what you were saying, this consumer debt for, especially I suppose power sports are probably one of those first things that go. People are like that isn't 100% necessary. We need the car,
It
we
rarely
need the
is.
house. Right, yeah. We need the car, we need the house. So that's what we're seeing a lot of, and so it's just interesting having heard that from somebody else.
People went a little crazy during the COVID boom when it came to
Free money.
buying the fun stuff.
Yeah. Very similar. I've got a buddy who owns a power sports company. I say, hey, how's business? He has how's real estate. We caught up. We get together once a year. And I said, well, you get kind of that same conversation. I said, well, how about you? He's selling these things. Boats are still okay. Pontoons are good. But I said, what about like UTVs? Your side by sides. He goes, like Rangers, like sportsman's Rangers, like utility Rangers. They're still selling really well.
Yeah.
It's the razors, all of the fun ones, the fast ones, the ones that you're just only using for recreation. He goes very, very slow.
Right.
And I said, well, that's kind of actually lines 100% up with in the exact industry there.
Which is crazy though, because you think about a couple years ago, and you couldn't buy what's the Spark jet ski. You couldn't find one in the entire Midwest for sale because everybody wanted one. It's just crazy to me that now everything's so slow when, man, all that stuff was just on back order for years.
Yeah, it's debt.
Yep.
So that's a big driver of what's happening in the market right now.
That was actually one thing that we had a conversation about yesterday at our Bible study. Was there's somebody that we know that wanted to buy a house, and he's just like, how can I buy a house? And we're like, well, got to pay down that debt first, and there's just so much of that out there.
Well, let's not leave it all doom and gloom. Let's at least give them a tip of how to get out of this. I read something and it was actually fascinating. You can't say saving is important. It's also kind of boring, and takes a long time.
Yes, it does.
Saving a down payment. I heard it is much easier to make $10,000 more than it is to save $10,000 of doing what you're doing. And again, that often comes at sacrifice of, you know what? I'm not too proud. Like if I needed to go get another job or something to, get debt down or anything like that, go deliver pizzas like Dave Ramsey said. Go get that second job. It's just like, who cares what other people think? If that's a goal in your life is to get out of debt or make that down payment, is increase the income, and
Yep.
it's in yeah, again, I want people to have fun and everything, but prioritize, setting yourself up for success later is instead of the time spent in front of the TV, go go deliver pizzas. Go do something else that's gonna really increase your bottom line to take you to that next level.
Yeah, because one thing that I've said to people, and I'm not too much a person that is out there convincing every person that they need to buy a house. It's if this is right for you in your situation, yeah, let's go for this. And one thing that I've told people who have said that they're going to wait to save up more money, and if they say, yeah, we're going to buy a house, we just need to save some more money, and kind of what you said, just not changing anything. My point is, all right, well, how much do you think you can save per year? Say it's $10,000, and the house that you want to buy is a $400,000 house that's appreciating at 3% a year. Well, that's $12,000 a year. So if it takes you a year to save up $10,000, the house value just went up $12,000.
Mm-hmm.
So, and I think I did that math right, but it just when we're kind of looking at it that way, it's there is certain things that I'm never going to be the person to say, nope, you should buy this house right now. It's your decision
Right.
if you want to do that, but there are other things to think about besides, oh, let's save $50,000 instead of $40,000.
Yeah.
So
When people have been saying that, like, hey, we're going to save money and maybe look next year, people have been saying that for the last decade and wishing that, man, we should have bought it last year. And, you can't promise that it's going to be the same, that trend is going to continue. But man, I mean, there's a lot of people that wish they bought in 2016,
Yeah. When I started, it was networking meetings. It was, hey, I've got a buyer looking for. It was like, we want 10 acres. We want a pole shed. We want within 20 miles of Buffalo, but we only want to spend 200,000. And I'm like, dang, like
Me too.
everybody, and they're like, that's too much at 215,000. I'll just wait for things to crash. And now that property, that's a $600,000 property,
Yeah.
like almost all day long. So those are drastic times again, but it's not meant to like push your personal limit. It's hey, be smart about it. To your point of saving $10,000 a year, if you can increase that income in a short amount of time, 3 to 6 months, it's not a forever commitment that you have to have, a second job or doing something to sell some stuff. Most of us all have too much crap anyway. So
Yep.
anyway, so I guess if you're going to learn anything, sell some stuff. You've got too much stuff.
Sell
too much
things,
debt.
play the lottery, buy penny stocks.
Yeah, penny
Not
stocks.
official advice.
Yeah, that's
No.
that's terrible.
Terrible
You can-
advice. That's not a true statement.
Yes.
I heard you
He
can
does
get
not. He does not speak for the firm.
Yeah, I heard you can get a killer deal on a razor these days. So
Yeah, absolutely. All right. Thanks for tuning in.